Afternoon, all you wonderful money masters and treasure hunters. Welcome to the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom during this first hour. Tom is actually getting ready. He's preparing himself for the inaugural event, the kickoff event for the Tiger Real Estate Opportunity Fund, folks. And if you qualify as a accredited investor, what you can do is send an email to TigerFund, TIGERFUND at TFNN.com, or you can call our offices here, different toll-free number. You can call 877-518-9190. Ask for Kathleen, and she'll get you all set. So Tom is going to be here from 5 to 6, but I'm filling in for him. Tom and I do a show each day, Monday through Friday, called The Money Masters. I actually kick things off for TFNN each and every day at 9 a.m. So if you are wondering what's going on with the markets, don't tune in to CNBC, or you can tune into CNBC until 9:06 a.m., then tune in to TFNN, because I come to you live each and every day from this television network. You know, we broadcast on the radio, and thanks so much for listening in. All of my shows are actually archived on Channel 9, and it's a great way to understand what's going on inside the markets, pre-market, because I take a look at patterns, whether they're A, B equals CD patterns or retracement Fibonacci, but there's absolutely patterns that are out there. And so tune in if you haven't checked out that show. I also do a newsletter for TFNN, and I teach people. In fact, I will be out in Boston next week on the 27th and 28th, holding a master trader course. All of the details are available at the homepage at TFNN.com. Check that out, or send me an email, Steve at TFNN. Always great to hear from folks. As we take a look around the world here, let's go see how our markets finished today. And you had a flurry of selling into the last couple of minutes or so. You had the Dow finish down 82.79 points, finishing out at 13,032. We had the S&Ps off 5.5 points, 5.6 to be exact, finishing out at 1385.14. Composite, really not too much damage out there, down 11 points. That was 0.37. They were the strongest in the strongest of the indexes out there today. You had the small caps off about 1%, just shy of 1%, down 7 points. If you take a look at some of the high volume active stocks out there, you had Microsoft down 30 cents, Intel off 52, Google off $2.12, Cisco off 2 pennies, Apple finishing down $1.36. If we take a look at what was popping and what was dropping, popping, folks, was Intuitive Surgical up $38.99, finishing out the trading session at $584.52, and dropping was Terra Nitrogen. They were down 3.4%. They were down $9 and change. IBM also finishing down pretty hard with the volume, finishing down $7, 7.32, finishing out at 200.13. Our call number is 877-927-6648. Give us a call, folks. We'd love to hear from you. So right now what we're taking a look at here is the S&P 500 index. And when we take a look at the S&P 500, what you can see is, yesterday, excuse me, strong day up. We opened up the session at 1369.57, closing out at 1390. You closed out today at 1385. Not too much damage done there. We're going to switch over to the SPYs, take a look at the volume going on there. But what you did have is you did have a pause up here. You would have preferred to have seen the SPYs, excuse me, from a bullish standpoint. You would have preferred to have seen the SPYs close over 1392.76. I'm going to grab just a sip of water here. Afternoon, we get just a little bit of dust in here, and that just sucks right into my, to my voice cords. That's no good. You would have preferred, from a bullish standpoint, to have seen the SPYs close over 1392.76. Didn't have to, even just by $1, even by a penny, because you wanted to see some follow-through. We had a 3-river Morningstar candle formation that completed yesterday with that large move up. And what you like to see from a bullish standpoint is some follow-through. We did not see that in the S&P 500. Let's go take a quick peek at the SPY. So we take a look at the SPY. What kind of volume do you do today? You do a lot of volume there. 119 million shares. That's after doing 147 million shares yesterday. You would have preferred to have seen the SPYs at least get up over 138.78. Why do I say 138.78, folks? Well, because that is the open gap that was created. In fact, that gap actually, did that get filled? It did get filled yesterday, but you would like to have seen it gotten up over, and that's the April 9th time frame there. 138.78 was the high. You did 127 million shares. If you take a look at today, did you even get up to 138.78? You got up to 138.38. Didn't have enough juice to get up there on the inside day, but if you are watching us on Tiger TV, what you will notice is you will see this uptrend channel. So if you're looking for a positive piece of information, you finished really right on that line. You would have preferred to have seen a little bit more conviction than what the spies gave us. And this uptrend channel, folks, this has been in place going back into the October 4th time frame. And you can see that, there has absolutely been some strength. We have had a false break, potentially a false break to the downside. Now, you did that with volume. You did that on April the 10th when you came down with 235 million shares. You're back inside that uptrend channel. You want to see some conviction up there. We really don't have any conviction in the market, at least on the SPY. Let's go back over into the indexes here. Let's go take a look at the Dow next. We'll pull the Dow up here. You had the Dow finishing down 82 points, and we take a look at the Dow. As soon as I pull that up here on Tiger TV, what you will see on the Dow is you will see that it still is inside that uptrend channel. So the Dow showing more strength from a price standpoint than the S&P 500. Still, you would have preferred to have seen a close above yesterday, although, the pullback not too bad. We'll go take a look at the diamonds there. But what I want you to see here is I do want you to see this uptrend channel that the Dow is in, and it's going to need to break down below, well below the 12,716 area, probably more like about 12,600 in order to break that uptrend channel. If we go over to the Dow Diamonds, we'll call up on that next. We'll see what kind of volume we had there in the diamonds today. Diamonds finishing out at 130.15. So as we pull that up, now you'll see a little bit of divergence there because you're going to see the uptrend channel of the Dow Diamonds. And what you will see here is you will see that we are just on the outside. You will see that all that it was doing today was testing the bottom of that area. And the diamonds today, of course, not coming down with any conviction at all. You did 5 million shares. That's after going up. Yesterday was 6.2 million shares. You had an inside day. You didn't test the top of the swing, or you didn't test the top of the candle from yesterday. You didn't test the bottom of the candle from yesterday either. So not really giving you a ton of information. If you come out and you take a look at, possible swing points, well, what I would pay attention to most would be March 13th. On March 13th, folks, you had some conviction. You actually had a gap up. You did it with volume. You did it with 8.6 million shares, the bottom of that being 129.85. You didn't trade down there this morning, so you're in pretty decent shape there on the Dow Diamonds, but you are outside of that channel, and you did break that channel with conviction. You did that on April the 10th with 13 million shares. Yesterday you got back inside, but today's action said, see ya, don't want to be ya. That's not exactly what you want if you are a bull in a china shop. Let's go take a look at the small caps, see what the small caps, Russell 2000, was doing out there. Let's first go over to the indexes. As soon as we can pull that up here on the screen, we're going to take a look at the Russell 2000 finishing out at 803.32. We take a look at the Russell, see if there's anything. Now, the Russell, folks, here's the beauty. Tom has talked to you about the Gartley sell pattern and the butterfly sell pattern that was created on the Russell 2000. As Tom and I started our Go Long America tour, you talk about Go Long America. That's why Tom has started the Tiger Real Estate Opportunity Fund, because you absolutely can learn to go long America. When we started that tour, what was beautiful was we had two patterns set up inside the Russell 2000. You can see those on the screen here. In the light blue area, what you're going to see is a butterfly pattern, a 1.618 butterfly pattern. That was also at the completion of an A to B equals C to D at 834. Right now, the Russell is the one that is showing that it is still the weak link in the chain. Folks, 877-927-6648. Would love to hear from you. Give me a call. We can take a look at your stock. And we're going to go see what Spain and Argentina are doing in the war on oil when we get back. We'll be right back, folks.